It's been an explosive past few months for Bitcoin, equities, and other global markets. After a liquidation event in March that sent cryptocurrencies down by over 50% and other asset classes down almost as much, a bounce has ensued that has largely deleted the losses of March. BTC now trades for $9,400, up by approximately 30% since the start of the year. And the stocks of the FAANG are up on the year, surging as the world adopts digital technologies in response to the pandemic. Some have deemed this a relief rally triggered by central bank money printing, but JPMorgan analysts recently came to the conclusion that the S&P 500 could rally even higher. And Bitcoin stands to benefit. According to a research note shared by Dan Tapiero, CEO of a precious metal investment company and a prominent Bitcoin bull, JPMorgan is predicting equities will rally 47% from here. This comes after they rebounded approximately 40% from the March lows. The analysts attributed their prediction to their equity position metrics, which tries to draw valuations of equities by looking at the size of the bond and cash universe. The insinuation is that with the amount of cash in the system exploding higher due to central banks and bonds rallying due to central bank buying, equities may be relatively undersized. Tapiero suggested that this may be bullish for Bitcoin and gold, writing that some excess cash in the reserves of investors may go into gold and Bitcoin instead of equities. He's not wrong in suggesting so. A team of JPMorgan analysts reported on June 11 that for the past few months, cryptocurrencies have traded more like risky assets like equities, a significant change relative to the prior couple of years. So should stocks continue to rip higher, so too should Bitcoin. Not everyone is convinced that stocks and thus Bitcoin are ready to continue higher though, especially as the underlying economy remains somewhat weak due to lockdowns. Jeremy Grantham, a prominent stock trader that called 3 previous stock market tops, told CNBC's Closing Bell this week that he sees telltale signs of a stock bubble. Scott Minerd, the global CIO of Guggenheim Partners, made a very similar comment just a week earlier. He also said that he sees bubble-like qualities in the equity markets. Should stocks crash, so too should Bitcoin, just like in March.